morning, Barry. How are you?
Hey, good morning, Vanessa. Happy and healthy New Year to you and your family.
Thank you so much. Same to you and yours. And so let's continue our conversation about first-time buyers, especially as we start the new year. What's new?
Well, we're still continuing the trend of seeing mortgage rates dropping, which is very fantastic news. Very happy to everybody out there. I was happy and very satisfied with the new year starting, getting all my initiatives in order, and having a lot of old clients who were looking at homes last year and either gave up or put it to the side, that they're hearing about mortgage rates dropping and they're back in the mix and they really want to understand and identify whether or not they would actually qualify and feel more comfortable within their budget. So that made me really excited to really get this week and get this year off and running with some of the old prospects I was working with last half of 2023, and just some of the new people who've come into the mix the last couple of weeks.
It's interesting. I can underline that fact. Looking at our CRM, the number of buyers that are returning to searching that have been in the system for maybe 2-3 years, actually. So we should keep an eye on that, right?
Oh, no, absolutely. And, obviously the competition is even fiercer now than it's ever been in our industry. I mean, I'm seeing people on the mortgage side who are not renewing their licenses. I'm hearing about realtors not renewing their licenses. And unfortunately, there was a little bit of weeding out. The strong will survive. We are the strong, and we plan on surviving through the bear market. And it's definitely interesting. So every deal is that much more precious than before.
This time of year, there's always a little bit of weeding out. I think this year more than ever, because it's the time of year that we have to pay our huge fees to NAR and the MLSs.
Right.
A lot of people, right after Christmas, it seems so unfair to do it at this time of year, especially when the market's like this, but it happens. And as you say, it's the survival of the fittest, essentially.
In the final quarter of last year, we are required to finish our continuing ed requirements and get our licensing in order that our company helps us with. So yeah, no, it's a crazy undertaking and it's a lot involved. And I'm sure there were a lot of people who came into this market when rates were extremely low and took advantage of all the refinances out there. But I'm a firm believer, the best relationships I've ever created were the people who I've helped buy homes. Because it's such a scary endeavor, it's a scary process, it's so nerve-wracking. It's not as simple as going to a department store and buying a shirt for a night out with the friends and trying to look cool. I mean, this is a big deal. It's the biggest financial obligation, and it's scary. And in the last 18 months, as mortgage rates have increased and risen dramatically, it's scared a lot of people. And
it has, and sellers and buyers alike, because sellers turn into buyers, of course, because they have to move somewhere.
And that's been a very tricky part, and one of the main reasons why inventory on your side has been at historic lows, because a lot of people are giving up the option right now, or putting it on hold for trading up to a bigger home.
Because it seems to me that a lot of people want to downsize, but they would actually end up paying more for a smaller home. So it doesn't.
That's an excellent point. You're absolutely right. And it's tricky whether you're moving 10 minutes away or moving 10 hours away. It's very scary, and you need your ducks in a row, and you need to make sure that your budgetary needs are being met and you're okay, and you're not putting yourself into a situation where you're going to have a tsunami of debt over your head that's going to suffocate you and drown you.
Back to the company that you work with at the moment, Cross Country Mortgage, and their free money, I want to say, of $6,500, which will help anybody moving anywhere as long as they fall into a zone here. Is that right?
That's right. Or it could be anywhere depending on where they live. It's based on where you live now, not even where you're buying. So if you currently are residing in an approved census tract, the CCM Community Promise Program will give that home buyer $6,500 towards down payment and closing cost assistance.
Wow.
And
that's actually really good incentive for somebody. I mean, $6,500 doesn't seem like a lot, but it actually goes a long way.
It goes a long, long way, because especially when we're dealing with our first-time buyers and they're trying to figure out, and they think they've saved enough for a down payment, but yet they haven't factored closing costs into the mix. So
that brings me to a point. So you said first-time buyers. Now, if they're renting, say in Rockland County, New York,
yes,
and they want to move to, they're getting married, say, and they want to buy a house together in Long Island.
still fine as long as their census tract works. And
how about finding out?
oh, it's just as simple as me asking a simple question: where do you live? I type it into an area median lookup tool that Fannie Mae provides and Freddie Mac provides as well. I get what's called a FIPS number from that, and I have an Excel spreadsheet with all the eligible FIPS numbers throughout the United States.
What's a FIPS? How do you spell that?
FIPS.
Federal something?
I don't even know what it stands for. Maybe I should know that. I should have known you were going to ask me that question, and I should have known what it was going to stand for.
I'll have to put it on the video.
Yeah, absolutely.
You're blushing.
You know, and I always like knowing what I'm talking about here. And
sorry.
But
anyway, if they get this FIPS number and they're in the right zone, then they qualify, and they should reach out to you in the first instance. And if they qualify, then what do they do?
If they qualify and they're eligible for the CCM Community Promise, it's just as simple as me letting them know that, you know, we're able to guide them and assist them with $6,500 of a closing cost credit, and that could be enough to win a deal. I mean, that's a lot of money. It could make the difference from somebody putting down 5% instead of 3%. It could give somebody the opportunity to pay their PMI insurance up front. It could just, yeah, it could go towards paying their mortgage tax and title insurance potentially. So on a co-op purchase, $6,500 might absolve all of their closing costs, everything.
Wow.
So every little bit helps. And by the way, just to answer your question, it's the Federal Information Processing Standard. It is a unique identifying code that lists county and county equivalents in the United States.
There we go. Thank you.
I hope that helps.
We have to know these things, you know. If we're going to
we do.
acronyms, we need to know the meanings behind them.
And I feel shame that you asked me a question and I didn't know the answer.
Oh, well, we don't know. That's okay. As long as we admit to it and we find out, that's all.
Yes. Absolutely. So, no, that's a wonderful program. You could put as little as 3% down. And it's fantastic for first-time buyers. Every little bit of help, you know, can work, because there are people who are nervous and scared to potentially take money from their 401k or their pension. They don't want to owe it back to their employer as a loan or to their plan as a loan. So there's people who are scared to do that. There's people who, you know, just saving that little bit of extra money just to get you over the hump is so terribly hard. You know, people have that thing in their head that they have to put down 20% to buy a home, and you don't. And you could literally wait 10 years. And look what has happened to our prospects that we've discussed over the years. People from 2016 and 2017 who could have bought a home potentially $150,000 to $200,000 lower than what they would have paid today. And they waited, and it's there's regret.
They say he who hesitates is lost.
Yeah. That's right.
Okay, I think we'll leave it there for this week. Barry, thank you so much.
Oh, thank you, Vanessa. As always, appreciated, and just all the best for a prosperous new year. It's going to be better than last year, I promise.
That goes for everybody. Thank you. Bye-bye.
All right, take care now. Bye-bye.